Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. The supports on this market continue to be the same as they have been since mid-May, and possibly, if you take out one aberration, since late April. They are the green short-medium moving average, currently at 97.13, which the market has pierced but has decided for now to still not let go. Then the mauve medium moving average, currently 96.01, which held up the market the last 3 and 4 weeks ago. The bright red neckline extension, currently at 95.50, of the November 24 to February 25 reverse head and shoulders bottom, and the gold long moving average, currently at 94.24. Further to this, at the start of July, prices rose up into the overhead band of congestion between 97.50 to 99.95. 99.95. Now, an area I've described 7 weeks ago as a gossamer area, even closing over it. But I did this just the once, and prices came back down to rest on the previous well-highlighted congestion between 93.95 to 96.06, which also contains the 50% Fibonacci line of the October 23 to May 24 move at 94.80. However, late 3 weeks ago, prices moved back up into that gossamer overhead area of congestion, let's say between 97.50 to 99.95, though not as high, leaving a nascent 2-pointer downtrend, and that's currently at 99.36, before once more moving down to rest upon the colourful supports. For good order's sake, I'd like to once again recap, as I've mentioned here so many times before, the 3 congestions which seem to be working our way up and down through. The first was between 91.83 to 91.86, quite small, and is the weakest of these congestion areas. The second is the already mentioned area between 93.95 to 96.06, and is the one we have become clogged down within over April and May, and from which we have moved up and away from for a while at least. The final one is the one we've been working our way back down from, the also previously mentioned 97.50 to 99.95 congestion. Overall, we have been chewing our way through these for quite some time. I added some thoughts to this 6 weeks ago when I said, and I quote, "It would be the cruelest blow to the bulls out there if the ammunition for this attempt higher should finally run out anytime soon. Just remember the next congestion area overhead is between 97.50 to 99.95, end of quote. Well, it looks like the disappointed bulls had a second attempt higher 2 weeks ago, but this also failed, with a key reversal down Thursday 2 weeks ago. And we're back down below the 97.50 to 99.95 congestion area. I imagine some out there would be hoping the market holds despite the high last week being significantly lower than the one in early July. It seems only the previously mentioned congestion between 93.95 to 96.06 is holding prices up right now. LME 3-month aluminium. As I've stated here many times before, there are a number of patterns here, one within another, all happening at the same time, all affecting the market in their own way, though the picture may be starting to get clearer. To start with, and is by far the most consistent one, is the bright red shallowly bullish shift pitchfork for the mid-December 23 to late July 24 move. For a while in March, we saw prices starting to establish themselves over the middle time overhead, which is currently at 26.84. But as I stated 17 weeks ago, and I quote, "It was a tenuous hold over it, and prices dropped down through it and have remained below, pushing further down. However, this pattern still works at the lower time, and that's currently at 23.75, and that's the end of the quote. I added to this 16 weeks ago, and I quote, "This is one to keep on this daily chart, as the low of the move has been right on the bright red lower time." End of quote. We've seen the bright red lower time punctured, but repaired with no closes below it. And this action worked pretty well at showing the low of the recent move down. And then from late April to date, we have seen a number of attempts at piercing higher. In late June, the market pierced on the upside the flatlining gold long moving average, currently at 25.68, reaching up to congestion at 26.50, and just short of the big old 50% Fibonacci line of the 2008, yeah, that old, 2008 to 2022 move at 26.75. We then pulled back down to sit on the gold long moving average, which is within a small congestion band between 25.63 to 25.81, and started accumulating ammunition. We also constructed a mid-April to date a dark blue bull channel, currently 25.87 to 27.83. Now the lower trend line looked solid enough, though the upper trend line is still only a 2-pointer right now, but it's far enough above not to be a concern yet. However, as I said last week, and I quote, "Thus it seems the flatlining gold long moving average is the one to watch, and the dark blue lower bull channel line," end of quote. Well, last Thursday prices punched down and closed below both. However, the market has so far not managed to establish itself below the gold long moving average, though the dark blue lower channel line is very close to being broken, with all the implications that may mean. The next support below is the rising green short medium moving average, currently at 25.56, which doesn't look that great, followed by the lesser Fibonacci line at 25.36, and then a declining mauve medium moving average, currently 25.21, which also doesn't look that great, though it is close to the 50% Fibonacci line for 2025 at 25.18. I suspect the next decent band of support is the one created back in May and early June, between roughly 24.41 to 24.85, though I could be wrong. I'm afraid that the action this week is as a result of what I said last week, and I quote, "Whilst above, keep an eye on the bright red middle time." Interestingly, the dark blue lower channel line crosses over the bright red middle time in late September. So we have plenty of time for a significant move in between, end of quote. Well, it seems we do not have as much time as I originally thought. LME 3-month lead. The key features here, and some of them in here for a while, had in the past all related to a very large broken descending triangle or a related broken descending wedge pattern. However, a newer mid-April pattern has showed itself. But first, the broken descending triangle and broken descending wedge patterns are both made up from an early July 24 to early March 25 purple broken downtrend, now well and truly broken. And for the descending triangle by a bright red broken early August to late December 2024 head and shoulders neckline. That's currently at 1958, which had earlier acted as an immediate support zone, and it did so again late last week and again this week. Then for the broken descending wedge pattern, well, this is made up from below by a dark blue broken neckline extension of the July 23 to February 24 head and shoulders continuation pattern, as well as the earlier mentioned and common to both patterns purple broken downtrend. We've had breaks out of these two patterns, false breaks, both above and below, but in mid-May the market waltzed out more or less sideways for a final time out of these patterns, and it was out of these patterns on the top side. The key congestions the market had to overcome were, and still are once more, all centered around the 2001 to 2003 area. This is a small congestion which gained significant attention, as I noted in my earlier video commentaries, and which we have been embracing one way or another the last 3 weeks. We right now have plenty nearby and below to this congestion the mauve medium moving average, currently at 1991, the green short medium moving average, currently 2004, and the gold long moving average, currently at 1996. Now, 6 weeks ago, prices took a flyer on the upside, overcoming all these, as well as the congestion between 2036 to 2039, including the January 21 high at 2039, and up to the next congestion at 2060, which was breached, but which eroded the bullishness enough that we formed a horn top over the last 5 to 6 weeks and turned lower, reaching both the primary and the secondary targets for this pattern. However, as I mentioned right at the start, there is a newer mid-April to date pattern that has emerged. It is based on the bright green mid-April uptrend, currently at 2031, and was breached on the downside 3 weeks ago, then seemingly repaired, only to be breached again on the downside last week. This bright green trend line was originally seen by me as part of an ascending triangle pattern between May to June, but it has developed into a mid-April to late June bump and run reversal top pattern. Now, as I said the last couple of weeks, and I quote, if this pattern decides to follow through on the downside, then we will have a primary target X down in the 1964 zone, just above the bright red extension to the August to December 2024 head and shoulders neckline, and a secondary, harder to reach target X1 down at 1916, coincident with the low of January this year. Last week we saw a second concerted attempt lower, traveling further down than the one in mid-July and continuing today as we see prices challenge the bright red neckline. In the process, the primary target X at 1964 was reached, but we are right now hesitating before attempting any further moves lower. I watch in anticipation of further moves. Finally, there is one additional point I would like to make, and it's something I've been making here since the start of this year, and I'll continue to do so going forward. It has been and still is to me the most important point of all. So, at the end of December last year, we saw that 2024 had created here a very large and rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this long-term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.